that was my very first account. And the moment he came back on the phone was the moment I knew I was going to be in payments.
Welcome to another episode of the Payments Strategy Show. I'm Aaron Steinberg, VP of Revenue at Rainforest. We help software platforms embed payment processing into their core products to grow revenue and improve customer retention. I'm very fortunate to be here today with Zaiaad Khan. Zaiaad is the Chief Revenue Officer at Dogpack, a marketplace that makes it easy to discover dog-friendly services. Zaiaad has an extensive background in the payments and payment facilitation for software platforms space. Thanks so much, man, for joining. I'm really excited to talk today.
Yeah, you as well. Thank you for having me.
Awesome. So I guess to kick it off, Zaiaad, tell us a bit about your background. How'd you get into payments in the first place?
Yeah. So I have answered this question about 100 different times in the last couple of years, and everyone's got the same answer. I've realized that, man, it's really just, I just fell into it and it's stuck here. There's an actual story that I've never told before. And I thought, hey, why not tell the story for the first time on this podcast?
Love it. The story. Heard it here first. Payment Strategy Show.
There's an actual moment in my life where I knew that I was going to be in payments for a while, and it was shortly after joining the RM team at Chase. I spent a couple of years in payments before that. I wasn't necessarily really committed to being in payments long term. I was kind of just doing it until I figured out what I wanted to really do with my life. And to kind of set the stage for you and listeners, I think at the time, payments was a very simple space. PayFacs didn't exist. Payment gateways is all it really was. They were all linked to major banks. Here in Canada, it was Moneris and JPMC were the two beats. I worked at JPMC. It was very straightforward every day. We really came into the office and it was, okay, how do we win customers away from the other guys? Mm-hmm. And I remember being on the support team and thinking, I maybe might want to get into product, maybe want to get into advanced troubleshooting of devices. I'd love to take apart those devices and put them back together again. And there was a gentleman by the name of Wayne who made the crazy decision to see something in me that I don't think I saw in myself, and said, hey, would you like to be a relationship manager? And I thought, yeah, cool. Why not? Right? I had zero frame of reference for how cool this was at the time. I just thought, oh yeah, cool. It's another job to do. And I was maybe 19 years old. I wasn't even done graduating school. I was still in university. I was in my last year of university. And he grabbed me, threw me into the relationship management team, and did me the greatest service in my life, and said, hey, look, we're going to give you accounts so you can really learn from. And it was accounts that really hadn't spoken to us in a while, had been quiet for a while, dormant. This is back in the day where accounts really, it was a one-to-one. I've got a retail store, I've got an e-commerce shop. I'm signing a 5-year deal, and then I don't talk to anyone for 4.5 years. And so when I got these accounts, I reached out to the very first one. And I looked at the date on it. It was signed 5 years before. No one had talked to this account in 4.5 years. And so I reached out to them. And within the span of maybe 5 or 6 hours, they reached out to me and said, hey, we'd love to talk. Why don't you come into the office? And I for those 2 days between that email and that meeting, I'm surprised you could fit my head into the building. I was so full of myself. For those 2 hours, Jay-Z on the headphones, just walking in, because I felt amazing. I was like, this is great. I'm going to be great at this job. And I remember that Wednesday. It was a Wednesday. I drove out there. It was in the GTA. It was 2:00 in the afternoon. I bought a suit.
Love it.
Full of this thing, and I showed up in the office with my little bag and my little contract in my bag. And I thought, oh, this is going to be a quick win. And they greeted me at the door, and I remember it was the controller, and he was so happy to see me, so jovial, really nice guy. I gave him a box of donuts. And he's like, why don't you come into the office and meet our CFO? And I remember him opening the door, and there was a gentleman sitting at the desk. He was a rather older gentleman. He had his glasses halfway down his nose, and he had a piece of paper just like this. Well, he looks over his glasses at me, and he just says, do you know what this is? And I'm like, no, I didn't need to introduce myself. This is how the conversation is going. And he turns the paper around, and I can't really see what the paper says, but I can see the little logo in the corner. And it's a Moneris logo. Mm-hmm. And he just says, I haven't heard from you guys in 4.5 years. Who the fuck are you again? And I blacked out. I think he gave me a concussion without ever laying a finger on me. I remember next week, being in my car, having somehow talked my way out of that room into a let me see what I can do kind of discussion. I get back to my house at about 3 o'clock and 3:30 in the afternoon. My dad walks in the door and I just unload. I'm like, I don't know if this is for me. I don't think I'm going to be able to do this long term. He listens to me kind of just vent for like 45 minutes. And then he just says, it sounds like you've got some work to do. And I went back to the office, 4:45 in the afternoon, spent about an hour at my desk, just taking a little surgical razor blade to every part of the agreement that I could, so I could align it to exactly what they were looking for. I gave him a call around 6 o'clock in the afternoon. I said, look, it's my first account. I'm going to be completely honest and candid with you. I don't want to lose this account. I can't promise you that I'm going to be there every time I pick up the phone, but I can promise you I'm going to do my absolute best. And I said, look, is this good enough to get it over the line so that you guys don't leave JPMC? And he said, well, let me put you on hold. And he put me on hold for 15 minutes. That guy turned out to be a great golfer. And that was my very first account. And the moment he came back on the phone was the moment I knew I was going to be in payments. Because I've done a lot of things in my professional career. I don't think I've done anything as fun as that. That feeling that you get when you find the right customer and you do the right thing and you say the right things and you're an honest person and they say, okay, I want to work with you. That's a feeling that you're never going to get anywhere else. And I've tried this, from a professional standpoint, this is the only industry that makes you feel like that. And it continues to grow every day. So why would you leave?
Yep. That's an awesome story. I was like, I bet he better have closed his deal if he's going to tell them.
Yeah, it would have sucked. Can you imagine?
Yeah. Anyway, I got fired the next day, and yeah, no, that's absolutely awesome. And the irony is that, if you talk to people that have been in payments for a very long time, honesty and trust is not typically the first thing they say about banks and processors, right? So your experience of just being that, because that's who you are and that's what you knew and that's what you believed in, probably paid more dividends than you actually initially understood, if I was to say, just hearing that story for the first time.
Well, look, I know that we're probably going to get into a little bit of how the industry has changed in the future. I think let's put a pin in that one because I think we're going to come back to it. I think there is a cyclical nature, I think, of where the industry has been, where I've seen it go, and how I think it's changed since then. I think, the concept of being transparent in order to help the people that you're partnered with close deals in a way that's helpful for both of you is a critical thing that I don't think is done enough.
100%. We hear it every single day. It's still one of the reasons we do well. So it's we'll put a pin on that one. Anyway, I'd kind of like to jump into some more payment stuff anyway, specifically, around Dogpack, right? So, curious, what made you focus on both enabling payments acceptance and sort of the marketplace models as Dogpack being a little bit more unique than just the standard sort of SaaS or vertical SaaS offering?
Yeah, so the pain point that we were trying to originally solve with the marketplace was user-based. So, we think about what Dogpack looks like right now. We've got millions of pet owners all over the world who use the app on a daily basis. And some of them are using it for transactional things like, hey, I need to know what services or where I can take my pet to, who else is at the park. I've got a reactive pet, and I want to be able to check in and see, is his friend there or is his friend not there? And so from a transactional standpoint, you've got that group of people. And then you've got the people who are just scrolling through the social media feed, who have spent 15 minutes, 30 minutes, 45 minutes a day, sharing, liking posts, commenting on things. And when we started to look at the pet space with the same lens that I think some people have started to look at the fintech and finserv space, in that you're not really looking at what people are doing in the app alone. You're looking at what problem statements are these users having outside the app. We realize that as much time as they're spending in our app, they're also spending a ton of time trying to find good brands. Some people do it differently. Some people just chat GPT their way through everything. Some people Google their way through everything. If you're like me, I've got 2 cats and a dog. I just walk up and down PetSmart, right? Like that's what I do. Like I'm not going to lie to you. I browse and I just stare at toys until I figure out, maybe Tiger will like this one. And so from a pet owner standpoint, finding a good brand that you like and you can stick with is a hard thing to do. And so we wanted to build a platform where pet owners could find those brands. And then on the brand side, we realized that a lot of the current payment platforms, a lot of the current platforms for them to at least expose their business are built in a way that you fully own the platform and they fully own the solution. And it's made for growth, like Shopify, for example. Then you also own the advertising for it. And any platform where you don't own the advertising for it, it's not really made for you, right? Like I don't want a TikTok shop, for example, right? I get a lot of feedback from people where it's like, hey, those systems aren't necessarily made as well as they could be for merchants. They're made really well for users.
Mm-hmm.
When we started to roll this out, I just thought, look, I spent 15 years in this space. How terrible would it be if we rolled out a merchant solution that wasn't really a merchant solution? So we spent a lot of time building that back-end functionality for users, from the integrations that we have to the ability to flow personalization tools. So that way, if you've got like an Etsy-based product where it's heavily personalized, you can still do that. That was the nature of why we did it in the first place. And I think what we've seen from brands, at least, is that whether you're a very large brand or you're a very small brand that's just starting out for the first time and it's something that's a old side hustle for you, we're seeing a lot of traction with merchants on this because they don't have to go hunting for these users. These users are there and they're interested and they want to find the right products. For us, what gives us a bit of an unfair advantage is we get to see a little bit more of the user data than perhaps other platforms get to see. We get to understand a little bit more about not just their purchasing behaviors, but what's most relevant for them, right? Like when we first started the call, you mentioned that you're in Philadelphia, I'm in Toronto. And so the two of us, if we have pets, we probably are looking for things for cold weather. Not so much if we live in Texas, right? And so if we're showing jackets with folks in Texas, it's not helpful. And so that's really the reason why we went this direction as opposed to maybe some of the other ways we could have gone.
Yeah, that's really interesting that yes, we're talking about payments, but you could have stripped payments from that entire discussion anyway, right? And at the end of the day, like how are we providing value to customers? It's essentially like contextual discovery, right? Helping them understand what they're looking for. And then now you're focused on, discovery driven commerce instead of just, I'm going to handle your checkout.
And for me, so our payments part of that platform is a central nervous system that makes it all run. Like we've embedded a platform in there as a quote unquote PayFac light solution, because we know this is the easiest way to get conversion from our users when they're trying to check out really quickly. Some of the core functionality that you need, like the one tap checkout process, is really key when you're thinking about contextually finding something as part of the feed and seeing something that you really like and going, oh, my boy could use that. Click, tap, checkout, done. Right? It gives us that superpower to be able to do those things, whereas other platforms, frankly, don't get the chance to.
It's actually an interesting topic, right? So, for the listeners on here in vertical software that aren't really maybe exposed to a marketplace model often or anything along those lines, maybe you can help them understand sort of what is the difference between just enabling payment acceptance in your software platform versus the marketplace model, like what you're building at Dogpack.
Yeah, so I think in some of the vertical marketplace stack, vertical SaaS stack, where it's like, hey, I'm using this product as a way to do my business on a daily basis. I think there'll always be room for that in this model, because we don't purport to take over the entirety of what you do on a daily basis. We're an augmentation platform, right? And I think from a vertical perspective, when you're thinking about how this, like Shopify, for example, enables me to go to market, enables me to do all the things that I need to do to run my business, you can see it even in the way that we build our platform, that we want to be able to augment that as opposed to being a counter to it. We understand that people have spent their entire lives building that channel, building that solution. It's very difficult to unhook. And honestly, I don't even know why you would want to. To be able to do that, you have to be able to drive an absolute momentous amount of value. And frankly, from our standpoint, that's not where our value prop resides. Our value prop sits on hey, we're going to help expose you. And the only way that really translates to a product standpoint is marketplace. It's for us to say, look, we're going to build that functionality. Now, I do think what's interesting is that for folks who don't have that experience, who have not spent a lot of time on Shopify or building a solution or building an ecosystem of things that they use to manage their business, and who are just starting out for the first time, I am very interested, candidly, to see how does Dogpack grow to support those users specifically, who start with us, who don't start somewhere else, who say, look, I'm going to use Dogpack to at least help my brand achieve some level of growth. And does that now lead us down the path of creating a business case for us to support those specific users and potentially then build that part? I think that's certainly a way this could unfold.
Do you see the go-to-market motions looking different for those that are starting there versus sort of the way you got in the door in the first place?
Yeah, they're very different. I think, and it bears itself out in what they're focused on and sort of what they the confidence level in the products that they're selling. It bears itself out in the approach that they have. You have some folks who are still learning the ropes on things like customer service. When we first released this platform, I had a bunch of calls early on where folks were trying to fit the mental model in their heads, and they were like, "Oh, so it's like drop shipping." I'm like, "No, it's not, because for drop shipping, I don't want anything to do with the customer experience side, because that's really where you shine. That's where the brand shines. That's where we want to give you the ability to take front and center stage." And so, when we think about how those younger brands are now starting to step into that for the first time and moving from, "Hey, I'm doing this off the side of my desk," to, "Hey, I've got 100 customers and I'm actively working with them, having conversations with them. And maybe there's returns. Maybe there's like, hey, I want to buy more of these things. There's recommendations, there's suggestions on new products." Like that's really what we want to be able to enable long-term for, especially for those smaller creators.
You started today talking about JPMC, and there wasn't PayFac, and the gateway situation was different, right? And all those types of things. And you've also worked in vertical software platforms specifically, right? I'm curious, sort of, how do you see things in terms of how they've evolved for software platforms in particular, when so much of the legacy infrastructure was just built for merchants directly?
It's crazy, because I had a conversation recently where, as somebody who had been in payments for a little bit of time, they were having conversations with me. We were dating ourselves by what was the technology at the time? And I was like, I can't believe I'm saying this out loud, but I remember looking at a merchant statement and seeing imprinters, like the credit card slider things that you had to, and that's the era that I grew up in. And I think commercially and product wise, there are just a wealth of changes that have happened over the years. Gosh, I mean, when you think about like what it looked like for merchants to get access to payment services way back when, it was very simple. It was three things. It was, I've got a POS device, I've got a virtual terminal, or I've got an e-commerce app. I'm in one of those three buckets. And yeah, you had some variations to that, but really you squinted it, those are the three buckets that you fit into.
Sure.
And I can give you even a story. I remember being was our RM team. I was managing an account, and it was an insurance company. And this insurance company had been with us for a long time. They had just acquired another insurance company. And so I made my way out there to visit that insurance company's headquarters. They were managed by a different company, and they were talking about potentially shifting over once contracts were done. And they were giving me a tour of the office, and we were just walking around. And I remember seeing this group of people, and it looked like a support team, kind of. It was about 40, 50 people, all at cubicles. Mm-hmm. Where I was walking past the desk, and they were just kind of like leading me to the next section, and I just noticed that they had pin pads on their desk. And I just did the quick, I was like, why do they have POS devices on their desk? What is that? What are they doing with those? And they were like, oh, that's the team that when somebody, call in, and they give you your credit card number, and then they write it down. I'm like, I was never here. Don't ever. That's the invitation to pass on that story. But I was like, I can't believe that that's where we're at right now with I'm like, we have to move you guys to a virtual terminal, at least to start with, and then let's get you on full e-com. Like, let's get your users to log into a portal online, put in their information, so that way they feel like they're responsible, and they're not just calling somebody in an office somewhere who's going to write their information down on a napkin and then forget about it. And we've gone from that to such a wildly different solution now, where I think from a product standpoint, I mean, being a PayFac has been, or getting on the path to becoming a PayFac, and all of that entails long-term and what it unlocks for you outside of just payments, has been the conversation point across most of the companies that I interact with on a daily basis for the last, call it 5 years. And we talked about it earlier. I said we should put a pin in it, just in terms of transparency. I can tell you just commercially, I mean, back in those days, when you think about what that looked like for a merchant on a one-to-one relationship for payments, it's a scary thing if you don't really know what you're doing. Because you just to put yourself in the shoes of like a CFO, for example, I'd have CFOs who were managing $10 million, $20 million, $50 million. I once had a company that was in charge of, it was like a conglomerate of food services. And they were doing over $1 billion in credit card payments. And I remember distinctly being on the phone with them late into the evening doing a contract discussion. And we were debating the merits of IC plus 2 versus IC plus 2.5. And like it was literally half a basis point that we were negotiating over a span of 2 hours. And eventually he just came right out and said it. He's like, I don't believe you. And he's like, I believe there's more here than just this 2.5 basis points. I had to do a temper. I said, look, let's put the contract aside for a second and let's do a crash course in interchange. And I like 11 o'clock local time, PM, I'm doing like a crash course bringing up the Visa interchange. Interchange like guidelines and like, hey, you can access this on your own laptop. You don't need me. I'm not some guy who's trying to scam you out of this. You can go on Visa Canada yourself and take a look at this yourself. And here's what that looks like for you. And it was me giving this guy a crash course in $1 billion line of revenue business on where the majority of the costs were coming from. And at the end of it, he was like, why did we spend so long on this contract? I'm like, beats me, bud. I wish I could have told you this earlier because it would have saved me a ton of time. I wouldn't be late for dinner. But, now, you see this same sort of challenge statement show up where I think people are struggling with understanding payments, even some of the basic things like interchange, just at the vertical SaaS level, where some of the merchants have had the opportunity to have it baked into them for the last decade or so. They've had the opportunity to learn at scale. They've taken a look at this cost center 5-10 years ago. They've explored it. They understand it really well. Now, vertical SaaS companies, because of how fast apps are being created, how fast things are being released now, people are kind of falling into the payments volume and realizing, oh, crap, we've got like $10 million in payments. We don't understand the cost center for this business at all. Maybe we should negotiate. Maybe we should call up the payments company and figure out how we can get more margin. And that begins the process of trying to figure it out. And then depending on who you get, depending on who you work with, you either learn a lot or you don't learn enough.
100% agree. Could not agree more, which you mentioned the path to becoming a PayFac. And I think this is a really good segue into that, right? Most software platforms we talk to, whether they're doing 10 million, or if I'm being completely honest, 5 to 10 billion in annual volume, have found a reason not to be their own PayFac anymore, right? And some of these platforms, they have risk teams larger than full processors have on their entire team, right? And theoretically, they could do it, but they're no longer, right? So curious sort of the what and why behind your chosen path of, do I go PayFac? Do I go PayFac Lite? Do I do managed PayFac, PayFac as a service? Maybe help people understand sort of the differences and the pros and cons and decisioning in your mind, at least for your own business, or how you would recommend that to others.
Yeah. And so I think it's probably instructive to start with the why, because I think that probably helps you understand why I focus on the things that I did. And I'll preface this all, I'll say this on the front end. I don't think that this is a linear path. Right, I'll give my feedback because I think it's helpful for people who may find themselves in the same spot as me. But I leave a lot of room for not every journey looks the same, and so I think that there's not a silver bullet with, hey, I did this thing or I crossed this milestone. Oh, maybe it's TPV oriented or it's employee oriented or hired this person, so it's time to become a PayFac. I just fundamentally don't believe that. I've never seen that happen. I think it's more a confluence of things. Some of them are reactive and some of them are proactive in terms of strategy and long-term goals of the organization. I think the reactive things that really stuck out to me during my time when I was sort of thinking through this problem statement that I can reflect on now as being, hey, that was one of the reasons why we looked at this. Mm-hmm. First, on the commercial side, really reaching a glass ceiling on negotiations. And so to give you an idea of what that looked like in the previous world that I was operating in, we had a bunch of different payment processes. It was 4 different processors globally. 2 of them were the 2 leads, predominantly US and Canada. Slightly different solution. One was a pseudo white labeled solution. The other was owned primarily by the partner, and it was a rev share agreement. We spent a ton of time, my first 4 years there, getting into it for these negotiations, trying to squeeze 5 basis points, 7 basis points, going back and forth. Sometimes the negotiations would take upwards of 3.5 months, 4 months, 5 months, just trying to wiggle an extra basis point out of it. It got to the point where I remember with one of the partners, it wasn't necessarily contentious, but it was transparent enough that they just said, look, Zaiaad, I'm not making any money off this account. And I did that. That was nonsensical to me because just from a pure revenue standpoint, that's my background. I was like, why would you ever accept money from the account you don't make money from. They literally gave me an Excel spreadsheet with the previous 8 quarters of revenue. And they were like, look, some quarters we do okay. Some quarters we lose thousands of dollars a quarter. And the rationale was, from their perspective, they're just managing the back end. They don't get an opportunity to sit at the table with the marketing team. They don't get an opportunity to decide who their customers target. They don't have that benefit of sitting at the table and saying, hey, the company is changing their targeting segmentation from people who pay within 7 days to people who get paid within 30 days, right? They just see the benefit of the risk on the other side of that, and they have to make decisions accordingly. And so from a negotiating standpoint, we were hitting that glass ceiling on what we were able to pull out of that relationship. And it was starting to get to the point where we had pushed some of the partners so far that we were starting to see impacts in our business. So they were saying, look, we've given you X amount of basis points. Our current rev share model is sitting at, call it 53 basis points. There's not enough margin left in here for us to tolerate losses. So guess what? We're not going to tolerate losses. We're just going to start tightening the handcuffs on what we allow in the door. So customer service is now on fire. Our servicing model is on fire. Our marketing team is wondering, why aren't we seeing return on any of the things that we're doing? So these are the kinds of things that were popping up, at least from a commercial standpoint, where we felt like, okay, this feels like we're really pushing this engine to its red line here. And it's not like there's nowhere for it to go. On the product side, and this might be, I think, different now, but I mean, when I was looking at this, the partners that we had chosen at the time had different platforms for their different service models. So their PayFac Lite solution was on one platform. Their regular connected accounts was on a different platform that is how you would normally manage your business. And we had built to the end of the roadmap for new things that we wanted to do. And so when we started thinking about things like Pin on Glass and the ability to use your phone as a contactless source of revenue, we just looked at that and thought, hey, we want that product. We need that product. It's critical for growth. When are we going to get it? The answer we got was, I don't know, maybe sometime in the future when we have some time to build it on this old program that nobody uses anymore, that you guys are married to. And so we just looked at that and thought, okay, reactively now, this feels like we've outgrown this house. Yep. Now, on the proactive side, I think, at that time and also at this time, when you're making the jump to get on the road to PayFac, as I would call it, you're probably changing your view from just payments. And so we looked at it in the context of, okay, what other service things can we bring into the platform as a vertical SaaS solution that are helpful for our users? And what are the prerequisites for us to engage in those things, right? So some of those things are very easy to do, but are low-hanging fruit, like, hey, we should do lending. We should do issue. These have been around forever. Some of those things are a little further out and have only been done really successfully by a few people, like embedded bank accounts, for example, right? When we think about what that might look like. And the prerequisite for all of it was, do you own the customer or not? How much of the data do you own? How much can you replicate across different product lines? Can you reuse the same KYC AML data? And so that really became the momentum forward on, okay, not only does this house feel too small, but also if we're going to go to where we want to get to in the next 3 years, and really to be candid with you, the target statement that we were shooting for was financial product solutions over 100 basis points combined across all the different products, across all the different solutions, across all the different policies, all the things that you need to do to make revenue from payments as well as other lines of businesses over 100 till we get there. And the answer was very clearly yes, but you need to do things the right way. And so that's really what got us on the path to PayFac. And from the path starts at owning KYC AML data.
That is incredibly thorough and detailed. I appreciate that. I imagine a lot of people listening are getting a ton of value out of that. Zaiaad, you and I are both salespeople at heart, so it's killing me not to do a Rainforest pitch here, because that's literally what we were built for, was to solve all the stuff that made you go PayFac versus just upgrading to a new provider. So
you guys could have solved so many problems for me 3 years ago.
100%. We're just getting off the ground, but anybody else, hit me up. That's incredibly important. But I think it does actually bring up another question that, frankly, a lot of vertical software platforms just don't know the answer to, right? And the reason is, today is a little bit different, but even a year ago, most vertical software platforms were built to be SaaS platforms, not payments businesses. right? They happen to fall into payments, or they knew they needed to add payments for a variety of reasons. Someone told them, their investors knew about it when they invested in the first place, and that's why they had that thesis, right? Things like that. Now it's a little bit more common, like on day one, I want payments and I know I need it. Didn't used to be the case. That said, how do you know when to add other embedded lines of fintech, like lending and issuing and banking, as you mentioned? And also, how do you know when you should even consider taking on more responsibility, PayFac light-ish, if you will, of having your own risk team, registering with the networks, getting a sponsor bank, bringing on compliance? Like, that's a really tough question, especially when your entire board is telling you to add more AI every day, right?
If I can answer the question almost in reverse. So to take you to my thought process, when we were looking at different models and understand PayFac Lite, managed PayFac, PayTech as a service, we evaluated everything. We went the full gamut of, okay, what does it look like if we are going to become a full PayFac, jumping from super white label all the way to the end? What does that look like? And then what is everything in between? And God, this is going to sound like such an oversimplification. The money wasn't there.
Yeah, it almost never is.
The money wasn't there. It sounds so stupid when you say it out loud. I business case this thing to death. We cut the model in every single way. I had somebody else look at it from the finance team because I was like, there's no way this is right. The money wasn't there. Like it felt like it felt like I had stepped in a time machine back to that time when I was doing merchant sales one-on-one and we were negotiating the difference on a half basis point. And I'm like, okay, now instead of spending an afternoon negotiating a half basis point, I'm now trying to figure out how to, $750,000 of costs into a business model to support an extra half basis point of return. That doesn't make any fiscal sense. And so the model just wasn't there. And so when we really started looking at it in the context of what are we trying to do? We were trying to take on more of the responsibility because we think there's a thesis statement behind this that we think we can own risk better than the partners for whom we are currently working with. And that is I say that not out of arrogance, but out of trying to instill the confidence that, hey, we are such a tightly focused team on our own acquisition strategy. We know our customers so much better. We see so much more of our own customers than any partner can ever hope to see. Mm-hmm. But when you really look at what that statement, really, if you unpack it fully, it's that I have the confidence that my risk team, empowered by what they are able to see, empowered by what they know about that customer, are going to do a better job of managing risk than a much broader, much bigger, much more successful historical team, but one that's blinded because they don't get to see all the things that we see. They also have to benefit, they have to manage risk on the entirety of their platform and on aggregate. So that kind of takes them away from just tightly focusing on our business, much less our segment, even our industry. And so that was the bet that was made. It was that we think we can do this a little bit better. And if we can do it better, then the return will be there. And that's what helped remove some of these other options from the table on, like, for example, like a managed PayFac solution where we were trying to evaluate, all right, what's the cost profile of having 3 or 4 people in the same ecosystem managing discrete aspects of this for us? Because we thought, okay, if we can bring, X party in to do risk and we can bring, Y party in to do the money movement, then maybe the model could work. Again, it sounds silly to say it, the model just doesn't work. I would say that somebody who's doing well into the 10 plus, 20 plus billion, like the super massive companies that are in that state, for those people, sure, a half basis point is material. But when you're into like the sub 5, even the sub 10, I really struggle when I hear someone say, "Oh yeah, it was a no-brainer. We're going to jump right to PayFac." I think to myself, I've been there, and unless I missed something really critical, I don't think I did, but unless I missed something really critical, I don't know how that math makes sense. And so having a person or having a team that manages risk either in-house or you can partner with, that'll help manage some of those things in a way that doesn't feel like it's going to demolish your cost profile, is meaningful. And I think that's a really key thing.
I think it's a really practical approach, and you're absolutely right. And I think with vertical SaaS in particular, if you're a true vertical SaaS end-to-end platform, system of record, or just in general, not just glorified invoicing, right? You're actually a vertical software platform. You have that data moat that just nobody else has. And you also have that intelligence that you can leverage. It's just a matter of, do you want to take the risk? Are you equipped to take the risk? How long is it going to take you to get up to speed? What systems and tooling do you need? Or do you offload that to PayFac as a service, and then you have enough volume to just negotiate well enough to make the commercials work?
And I think that to answer the final part of your question from before, how do you know it's the right time to start investing in some of these other things as well? I think that's key to the question of, do you build the risk team yourself, or do you have someone to come in and help you, or a team like a managed PayFac to come help manage that process of risk? Because if you think you're already there's a clear thought process that I can see clearly unfolding for us, at least, and I can see unfold in other places, where you think, I'm going to bring in a risk team and they're going to do more than just payments, because there's a use case there already for issuing. There's a use case there already for lending. We have partners who have tested this out on the platform and it works really well. We want to get into that space. We know embedded banking makes a ton of sense. What does that look like from a risk perspective? I can see, you building the resiliency into the platform if you already know. If you don't know, and the conversation is really just, hey, we're trying to learn this and we're trying to grow one step at a time, then yeah, the managed PayFac, of course, makes a ton of sense, because you're not thinking about it in that context of, we've got a 5-year roadmap beyond payments. You're just looking at, okay, within payments, what are we trying to unlock, and how does a partner help us do that?
Only silver bullet in there is work with someone like Rainforest, who guarantees full portability and data ownership. Then you get to control your destiny, right? That's what we're doing here. Yeah. No, that's just, jokes aside, that's it's really valuable intel and sort of experience driven from multiple SaaS platforms and managed services. So I appreciate you taking the time. I think I'm going to end with one last question here, which we didn't discuss ever. So I'm curious your take, right? Which is, every software platform I talk to today says, my board is asking me for AI products. My board is telling me we need to do more with AI. My board is asking what our competitors are doing with AI. So whether they want to go down the path of becoming a PayFac Lite, or upgrade to a new PayFac as a service that provides them with more flexibility or ownership or better margins and basis points, et cetera, sometimes they're struggling with that. Curious, A, how you might manage that on your end, if that's ever something that comes across your desk, and B, what in payments do you think is such an interesting AI application that not enough people are doing, that maybe scratches the itch for your board, but also enables you to check all the boxes of all the other stuff? I know this is a very difficult, loaded question I threw on you, but I'm curious to your thoughts anyway.
Defend AI. No, I think, yeah. Look, for those of you who are listeners who are curious, Dogpack has the first ever AI characters that have been actually trademarked and licensed. We actually have 1 billion views and engagements with our AI dogs who talk on a podcast. So that's, but I'm pretty bullish on AI, considering the amount of growth it's given to the company in the last little bit. It's a great question, because I think payments is such a fast evolving space that sometimes it's difficult to predict really. How is new, also emerging, also super fast technology going to impact, and how are they going to cross over? I mean, there's the obvious things that have been in the news already with like ChatGPT working with like Shopify, for example. Mm-hmm. Those are the obvious things where, it can certainly, help commerce move a lot quicker. I think as an operator myself, one of the things that I think is really challenging for teams that are looking to get into payments is understanding how to build, not just, okay, I'm going to start treating payments like it's a legitimate line of business, but what does that mean? What does the GTM look like? What does the marketing look like? What does the sales motion look like? I think a lot of vertical SaaS companies struggle with that, because they're not built for that. They're built for other things. They're built for selling the product. They're built for going, very broadly about, here's why you should use X product for, accounting or for payments or for something else, something else in business, bookkeeping. I think when teams are trying to learn how to move really quickly and how to learn really fast, how to do testing on segmentation, on journeys, on putting, creating like 100 or 200 different profiles at scale and running individualized A/B testing on different kinds of copy, it allows you to move and develop so much faster. And that's what we're doing, right? We see it as a tool to be able to expedite some of the things that would have traditionally taken 6 months, 9 months, 12 months to test. and to learn, what kind of behaviors are you really looking for, what things resonate, what things don't resonate. Now we can move a lot quicker. We can run tests in the span of 2 or 3 days, catch what's working, double down on those things that are working, and then remove the things that aren't. I'm never going to be one of those people who says, hey, AI is going to take over the world. I just fundamentally don't believe that. I think we could probably do an entirely different podcast on the analogy between sports and how sports has adopted like analytics and the exact one-for-one business leaders and AI trend that you're seeing take place. I think it's an extraordinarily useful tool as long as you have a human at the rails who's sort of guiding it and helping it sort of develop and learning from it, and also helping to teach it so that it becomes better at what you're trying to do.
Even better, why don't we get a couple of Dogpack characters and ask them to have a podcast about that and see what comes out of it, see what AI thinks about AI. Right?
Yeah. Well, ask Goldie and Frenchie to do like a full PayFac video. And it's a very niche crowd, but they're going to love it.
Yeah, exactly. All seven.
My CMO is going to be so confused when I send him this podcast. He's like, what are we doing?
Don't worry. It's worth it. Just trust in the marketing. Yeah. Awesome. Well, I really appreciate your time. This is super fascinating stuff. I love seeing what you guys are doing. I think it's really an awesome foundation, awesome scale, thinking about the consumer, just doing payments right based on specifically your situation rather than just fitting into a box. So yeah, I appreciate the time. And anything else you want to leave the listeners with?
No, thank you so much. I appreciate it. Try out Rainforest.
All right. Love it. Thanks, Zaiaad. Talk soon.